One, two, one, two, one, two. Yes, money day, guys. Cool. Let's see what gold wants to do, man. Mm, 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 mm. So we have one. I reckon gold might need to run the lows one more time, guys. I reckon it might have to. Yes, gift, money day, my bro. Gold's been underwhelming, trust me, broski. But to be honest, I expected this, man. I expected gold to manipulate. Once we dropped, literally start of the week, we dropped. I was like, this looks a bit fugazi. We got this daily imbalance, so we might just chill inside the zone for a little bit, especially since we got the federal interest rate decision coming out as well. Like, I'm not expecting gold to do a madness until later. Do you know what I mean? Henry, is this gold? Yes, it is, brother. Welcome, welcome to the live stream. I think this is the first time I've seen you in the stream. What's happening? You good? Yes, it is gold. It is gold. Is this guy ID? Henry, who's ID? I don't get it. I think maybe you meant is this gold? Yeah, it's my first time. Tell me, bro, what's your favorite pair? Welcome though. Obviously, if you like the stream, obviously go downstairs. Well, go down below, leave a like on the stream and subscribe. If you enjoy this, I provide setups pretty much every single day inside of my Discord. The link to the Discord is in the description box down below if you're interested. Gift says, guess we have to keep an eye on the stream. Keep an eye on the news as well. Yeah, 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 yeah. To be honest, yeah, I would honestly gold. I'll just stay away from gold for now. Just for now, just to see how price prints. Because look, since we had that nice drop on Monday, right? Monday was pretty much the only nice move. Boom. I was completely AFK on Monday. Can't believe I missed this drop. Right, we had a little pullback, 5 p.m. We started to drop off, and then we've just been chopping. You know, we had this low, we swept it. Obviously, yesterday I said to you guys that we'll probably take out this low. We swept it, and then we rebounded straight away. I took a little short here, came down, ended up hitting break even, whatever. Then we kind of just chilled around this level a little bit. So in terms of today, because we've got the interest rate, I'm not really interested in taking any positions, at least right now. The only thing that I will say is obviously this blue box is the daily imbalance, okay? So inside of this daily imbalance on the hourly, maybe you guys would have noticed or you would have not noticed, but I'm going to show you anyways. We have this hourly imbalance right here, okay? And that's where we slapped off from yesterday. We've hit off the same area last night's Tokyo session. We've had a new high. So I wonder, right, if we are going to take out this low here or take out this low here, right? Ideally, look, the thing is, gold is going to manipulate, innit? Gold is definitely going to manipulate. So we are essentially waiting for the manipulation and then try and catch a move. This is still bullish as hell. Do you know what I mean? Looking at the daily, we should get a new high, new all-time highs potentially, right? At some point this week, maybe next week. But today is Wednesday, so I wouldn't be surprised if we do get that all-time high. You know what I mean? I wouldn't be surprised. Like, we've got the news driver to actually give us an all-time high for gold. Henry says, gold, bro, I'm a newbie. Okay, that's cool, bro. Yeah, like I said before, if you guys are enjoying the stream, make sure to leave a like on the stream and subscribe if you're new. I post more content inside of my Discord. It's completely free. The link to Discord is down in the description box below. You can join and then come back to the live stream. So we've just had some news come out not too long ago. Give me a second. We had initial jobless claims come out. The forecasted was 246k, right? The actual data was 245k, so it's 1k better than expected. You know, it's not anything to scream home about, and we haven't really had much of a reaction from the initial jobless claim. And the thing is, normally initial jobless claim, as most of you guys will know, tends to give us a bit more of a reaction, but the main thing today is going to be that interest rate and what the Fed is going to say. Like, that's the main thing for today. So essentially, I will live stream inside of the Discord later on tonight. We'll do a Discord exclusive FOMC. Yeah, we'll do a Discord exclusive FOMC today, and then we'll go from there. So if you guys are not inside of the Discord, I'm not going to say this again. The link to the Discord is in the description box down below. You can join me for that FOMC live stream as well. Okay. Usually, I'll be honest with you guys, when there is a FOMC meeting or there's an interest rate decision, you tend to find, well, for me anyways, I tend to find better setups after, right? So from Thursday to Friday are usually the best trading days of the week. Okay, during FOMC week, that's just what I've noticed personally. Okay, Monday there was a small reaction here, lower. Tuesday, in my opinion, Tuesday was complete trash. Don't get me wrong, there was a slight manipulation of these lows down here, taking out London sessions low, and then we started to rally. But to be honest, if I go over to EU, I don't think I caught it. Yeah, I didn't catch that sell there on EU. I was actually looking for EU to potentially rally up higher, but then when I saw this half-hour candle close, right? So one of my models involves engulfing candles. So look at this candle, how it wicked the high, and then the body of the candle has engulfed the prior candle, and to be honest, it engulfed a lot of candles, right? So that was giving me the potential, like, okay, cool, this will probably come down lower. Do you know what I mean? All right, so to be honest, we'll stay on the stream for a little bit. We'll see if there's anything loading up, but the main reason for the stream today, anyways, is to give you guys the game plan um into FOMC later on today. Okay. So, yeah, what are you guys' thoughts? What are your thoughts, guys? What are your thoughts on the markets currently? What are your thoughts, guys? Bank holiday tomorrow in America, bro. Really? Ooh, it is Juneteenth. That's interesting. Right after FOMC. That sounds a bit of manipulation to me, man. Juneteenth tomorrow, market's gonna be closed. And what's interesting is we've also got the Bank of England's interest rate decision. Hmm. I mean, on investing.com, it also says that we've got initial jobless claim tomorrow as well, even though we just had initial jobless claim today. I don't think that's accurate. Hmm.
And Congress is going to do about fiscal policy.
Michael McKee, thank you so much. We'll be catching up with you.
That's why they did that today, not tomorrow. It's usually on a Thursday. Okay, I got you, bro. Yeah, that makes sense. That makes sense.
I want to start with this idea that the wait and see.
I've just got some Bloomberg on right now. Let's just have a little listen.
Push back and say, actually, they have to give us a sense of what their scenario analysis looks like at a time where potentially that it could increase their chance of stagflation. What's your sense of what their scenario analysis looks like? What's their response mechanism to that?
Right. I think that'll be a really important part of the press conference today is to have Powell talk through the risks, the scenarios that the Fed is considering. Unfortunately, their tools like the Summary of Economic Projections, the way it's put together right now, doesn't do a great job of getting, scenarios across. But it is so clear that the Fed is in risk management mode. Right. This is about where inflation could go, how it could persist, and that this is kind of an insurance pause. Right. They want to avoid those risk outcomes, and so then it is a big part of explaining why is it you're on hold? Inflation's coming down. Why aren't you cutting now? So I think they really do need to kind of spell that out and give us a sense of what they're looking for in the data as it's coming in.
What potential damage could they do if they are too late and they should be cutting because inflation's coming down?
Well, it's unnecessary weakness on the economy. I mean, if you look at interest rate sensitive sectors like the housing market, the higher rates, they are having an effect, right? They're having an effect on people who are out there trying to buy homes, builders who are trying to, construct new housing. So, if like that is a pain. It may be necessary to keep inflation under control, to keep inflation expectations under control, but there is a cost, right? And I think the Fed is balancing that well, but it is something that should be communicated, because otherwise, just if you look at the data on hand and you think of the data driven Fed, it's like, well, why aren't you starting to cut or even talking about cutting? Like, they're really not just going to pause today, they're going to push that pause pretty hard through probably much of the rest of this year.
It sounds like you think Chair Powell is going to be hawkish today. We just got a note from Andrew Hollenhorst of Citi, and he said there's 3 reasons for Powell to be dovish. 1, 3 months of softer core inflation. 2, rising jobless claims, continuing jobless claims, and softer housing data. Do you think his rhetoric is going to lean hawkish?
That's interesting, guys. Pay attention to what Bloomberg's saying right now.
Come out and sound a bit dovish.
Yeah, I mean, I think a lot of it comes down to how, to me, one big question to listen to Powell today is to explain, that inflation data in the last 4 months, that's been unexpectedly soft. What's that about? right? Because if it comes, a hawkish tone to me would be saying, oh, well, the tariff inflation, it's still coming. It's timing. We just need to wait. It's coming. But, you know, you can look in that data and see some nuance, not just from what you think are tariff effects, but just inflation in general, where it's like, man, the demand's a little softer. Maybe this isn't pushing through. Like anything that he would say today that would kind of soften or push against all of these upside risks to inflation, to me would, I think, be pretty balanced. But you know, we'll just have to see where he says. And one difficult thing today with listening to Powell is understanding that, you know, he is speaking for the FOMC. That's what he does as Fed chair. He has his interpretation of it as well. And he probably will be in something of a live debate with the dot plot and the summary projection. So it's kind of tough to parse it on days where we get like these forecasts in addition to him speaking.
I love that. A live debate with him basically arguing the side of everyone on the committee and trying to sort of come out somewhere in the middle. I'm struck by what some people keep on saying, which is that a number of members of this committee are fighting the last war. They are so scarred from the use of transitory and failing to curtail inflation a couple of years ago that they are more willing to look through any weakness in the labor market in order to prioritize inflation. Do you expect that to be the same today, which is the reason why people are expecting more of a hawkish tone?
I think we'll continue to see the focus of the FOMC on the inflation risks, on inflation going higher. Again, the claims data today didn't, you know, reinforce any kind of an emergency, and we are at 4.2% unemployment, right? Like we are in a full employment economy, so we're starting from a good place. Inflation is still somewhat elevated, and just everything we've got in terms of the data, and then, like you said, kind of fighting the last war, the inflation risks just loom really large. But that's where just seeing how they're interpreting the data, how they're questioning their own assumptions about, you know, inflation could really get out of hand. I think that's the piece, you know, that'll be really important to understand if they're focused on the current threats to the economy as opposed to the threats we had 4 years ago.
Claudia Sam of New Century Advisors, thank you so much for being with us. Really appreciate your insights.
Okay, so essentially, they're predicting that the Fed is going to be hawkish today, right? But as that analyst was expressing, is that, I mean, when you look at all the data, even if the Fed is hawkish, he may try to balance, right, the sentiment of what's actually been going on, right? If the Fed is hawkish, and if we look at the sentiment that we've had recently, what has the dollar been doing? Right? If we look at 1, 2, 3, 4, 5, right? The past 5 weeks, you know, price, don't get me wrong, there has been some bullish weeks, but it's been coming down overall. If you look at the monthly candle, well, last month's candle, it's a bearish candle, right? So potentially we may be in for a bit of a pullback on um, the DXY, potentially. But we'll see how market actually reacts to it, because the forecasted data is 4.5%, right? So they're trying to say that they'll keep the interest rate the same at 4.5%, which is the same uh the same interest rate we've had for the past, what, 1, 2, 3, 4, yeah, the past four results have been 4.5%. There hasn't been any change at all. If we look at the 19th of the 3rd, right, 19th of the 3rd, right, we had the interest rate decision on the 19th of the 3rd. Let's take a look at what happened. So 19th of the 3rd, we had an interest rate decision, FOMC. Is that right? When was the last FOMC, guys? It should be 19th of the 3rd, 29th of the 1st. Hold on, guys, give me a sec. This thing is giving me a lot of data, boy. 7th of May. 7th of May. Yeah, here. Okay, so the last data that we had, right? This is the reaction that we had from markets on the 17th of May, yeah? Wednesday. Actually, I think I remember taking a trade here, you know. 7th of May. 7th of May, yeah. Yeah, we caught some buys, no, some shorts, I think, on this day. I think I remember. So, as you can see there, right, markets open, obviously FOMC, the interest rate starts at 7. The statement starts at 7:30, right? So 7, the date it was released, we had a push down. We had a slight recovery. The Fed started speaking. You can see we had a bit of a doji candle, but then eventually we pushed up. Right. Next, we've got, what is this? 19th of March. Let's take a look at 19th of March. 19th of March. Let's look for 7. That doesn't look right. I'm sure it's 19th of March. I mean, it says here 19th of March at 7. Alright, so the news came out. It looks like we had a bit of a push to the upside. Fed started speaking, pushed back down, and then we kind of continued throughout the rest of the day. We got 29th of January. Let's see, 29th of Jan. Okay, now this is much better. Okay, so FOMC came out 29th of Jan. 7, what did we see? We saw a push up. Fed started speaking. We had this little bit of a doji, but then eventually price came back down. So it seems like, I'm just looking at the past data where we had a 4.5% interest rate, yeah, and how markets have reacted to it. So the last time we had a 4.5% interest rate was 18th December. Let's see, 18th December. Oof, look at that. So interest rate came out 18th of December. Right? Okay, so this is interesting, guys, yeah? So as you guys can see here, we had a much bigger, push to the upside. Even when the Fed started speaking, it continued rallying. Now, what's different about this scenario here is the prior data that came out 7th of November was 4.75%. So when the interest rate went down, right, it dropped by 0.25 basis points, you can see we had such a huge, positive hawkish reaction from the dollar, right? So potentially, if we see today, we somehow get a 4.25%, which I highly doubt we will. I think these lot will just keep the interest rate the same. Again, I know they're very boring, but I do think they probably will keep it the same. We should anticipate the dollar continue to push up. Okay. And the other thing is, if I'm being completely honest with you guys and being frank and seeing the kind of price action that we've been getting as of lately, it's not great, right? There isn't when we were even inside this range here, it was quite clear that we were going to hold this candle here and sell off eventually. Even when we tested this daily candle, it was quite clear that we were going to get a pullback and then sell off, right? The thing now is, since we've taken out this low, market basically needs to reassess, right? It needs to readjust, rebalance, right? Because if we look at it from the weekly, what have we essentially done, right? We've just had, let's just say this is our swing high, swing low. We can pull back over the next coming weeks anywhere inside of this range, from this range is high to low. That's where the issue lies, because now, inside this area, it's not clear, it's not clean, shall I say. It's not clean because, we've had some gaps. If we had this kind of price action here, is a lot better, right? But I do think we need to allow this week to kind of print, and then next week we'll have a better idea of what price wants to do exactly. Because, look, don't get me wrong, daily picture is suggesting, yes, we've pulled up as higher than what we expected, but we should sell off again, right? That's what the daily picture is suggesting. Like, we should sell off again. Especially in and around this price level here, we should sell off somewhere around here and make a new low. That's what the daily picture is suggesting, right? Weekly, suggesting something similar as well, right? We've just tested the foot of this weekly candle, right? So within us doing that, it is possible that we can definitely get a sell. But again, because the lower time frame is not the best, it's not the clearest, in terms of the move that we've had and these highs, even if I wanted to take a sell from here, for example, right? There's a lot of highs here. There's a lot of liquidity here that can be taken. There's a lot of highs here that we can realistically swipe at the highs and then be a sell. Do you understand? And it's like sometimes during certain markets, shall I say, you've kind of got to just decide for yourself, is this a market that I really want to be a part of? Is this market condition where it's like, you know, should I decrease my risk? Should I keep my risk the same? Or what I would recommend is just trade something else. Look at something else. Bitcoin's been quite smooth. Even last week, Bitcoin was quite smooth in its dump off. You know, I didn't expect Bitcoin to drop so much, you know, as much as what it did. And then even, you know, early doors to this week, we've also saw Bitcoin drop again. And to be honest, I would probably think Bitcoin is going to drop again. Right? I would like to see Bitcoin drop again. Right? Then you turn your attention over to gold, and it's like, if you don't want to look at this, look at something else. Let me give you an example, yeah? USD CAD. I know it's still dollar related, but USD CAD has been moving. USD CAD has been moving. USD CAD has been quite good. You know, if you guys remember this setup that I gave you guys, bro, this thing has just kept on going. You know what I mean? If you look at the daily picture, it's easy to understand. So don't get caught up in just the majors. Don't just get caught up in gold or Euro USD, because there's going to be periods of times where it's just rubbish to trade. You know, there's going to be periods of time where it's more difficult to trade. Another pair might provide you with slightly better setups. You know, maybe potentially a Euro AUD, you know, might provide you with slightly better setups. Do you guys understand what I'm saying? Or maybe no, not an AU. See, even look at AU. Look how choppy that is. That is crazy. It's just pure chop inside of here. You know, look at oil. Oil's been rallying as well. Like there's opportunities, is what I'm trying to say to you guys. There's opportunities everywhere. And if you are finding it difficult to trade gold or trade Euro USD or trade any majors, look at something else, guys. I'm telling you, just look at something else. But even after all I've said, I'm still gonna look at gold for you guys, and also for me too, because you know when gold moves, it really moves. Let's see USD CAD if there's a potential move on here. No. Need to wait for FOMC for this. That was a very nice trade yesterday for USD CAD. Very nice. You see that? That's a nice little continuation play. Tested that half-hour candle. Boom. Rocket. Right, you could have mixed that up with Tokyo model as well. Could have used Tokyo model play as well. Took out the low, push down, push down, push out, push up. Yeah, the setup, the entry for the setup is somewhere around here as well, to be honest.
You know, there's this congestion at the ports, but that was all made up for. It was hard. It was very expensive to ship things. The transit times were really, really slow, like 120 days for a container go from China to the US when it only takes 2 weeks to cross the ocean. So that was all really tough, but it was made up for by the fact there was this huge surge of consumer demand. People had money in their pocket. There was a lot of stimulus and cargo volumes were up 20%. So demand for the goods were up really high. You know, if your business is doing well, everything's good. Whereas right now, from a macro standpoint, it feels worse for these companies because they're not seeing an increase in demand; they're just seeing an increase in costs.
Ryan Peterson of Flexport, thank you so much for the insight as we try to figure out how to understand the changes in trade, which have been really fast and furious over the past number of years. Honestly, I mean, this to me has been one of these stories.
And Ryan's talking about people want certainty for the next 3 or 4 years. I think people want certainty for the next 3 or 4 months. We still don't know where the trade levels are going to level off. As he says, right around the corner, we have July 8th.
How about certainty for the next 3 or 4 hours? Coming up at 1:30 p.m. Eastern, a Bloomberg surveillance special. The Fed decides. Will be joined by Bob Michael of J.P. Morgan, Kathy Jones of Charles Schwab, Rich Clarida of PIMCO, and Jeff Rosenberg of BlackRock. It'll be myself and Tom Keene. Jonathan Ferro is off for the week, so he will be missing out on the Fed special, but we will not, and we will be parsing through the statement of economic projections, just whether they will signal a dovishness or a hawkishness in response to the lack of certainty that we have around us. This was Bloomberg Surveillance.
Flood of investment agreements.
Deals were once again on display.
The Saudis are open for business.
The cessation of sanctions against Syria.
Another big victory for the Crown Prince, concerned that not enough guardrails may be set up just yet.
Headline after headline.
Trust Bloomberg for on-the-ground coverage.
The numbers will be quite substantial.
Up-to-the-minute reporting.
Driven the price of oil down.
And the analysis you need.
He's basically going to vault this region into the same sort of sphere as the US and China.
No one covers geopolitics like Bloomberg.
How much does the geopolitical volatility emanating from the United States perhaps undermine the bull case for Mexico? Is that a scenario you've plotted out?
Structurally speaking, we do still have a very positive view in Mexico. On the macro side, it is a very attractive investment geography for the U.S. Mexico is hugely competitive in terms of costs. The wages in Mexico are much more competitive than the wages in China. So why would the U.S. companies not take advantage of that?
And this structural cost advantage is going to lead Mexico to continue to contribute to the growth of U.S. as well. The value chains, the supply chains are so integrated that Mexico has to play a continuing role in the further development of the U.S. And U.S. is growing very healthily, very nicely. It will benefit Mexico. This way or that way, it will benefit Mexico.
Mexico for BBVA is, a source of resiliency of earnings, and it generates a complementary diversification that we have from the footprint. But there's another topic that is very important, which sometimes we don't focus a lot about, and why we're so convinced that Mexico is going to continue to do well, which is the leverage in the country. Because the leverage in the country is only 33%. And when you've seen Mexico grow and BBVA grow in Mexico, structurally speaking, the leverage is so low that just a little bit of growth in the leverage is going to be able to support that bull case in Mexico. So that's why we're structurally positive in Mexico.
The incidence of cancer, which is to say people getting it, is higher than it was 20 or 30 or 40 years ago. Is that because detection is better than it used to be?
Very dry
The
right
dirty
now.
secret is we have no idea.
But I'm not surprised, man.
We don't collect data well in the United States. What we do know is that there's not a dramatic rise in cancer in the United States, but what we are seeing is a troubling trend is younger people.
I'm gonna start opening up my repertoire, shall I say?
We have no idea why, but we are seeing
Yeah, I'm gonna start opening up my repertoire and add maybe
younger individuals, 20, 30,
dollar is the
40-year-olds
base pair on some of these pairs, you know.
used to
I'm
see.
gonna start looking at UJ,
I assume pollution or the environment in some ways.
We
USD
assume
CAD
it's either something in the environment
as well. I'm
we
gonna
assume
add that
it's
to the list.
diet,
The pairs.
It's ultra-processed foods, it's
Because
microplastics, it's changes in the microbiome.
some of these pairs are just
We really
making
don't
it
know.
difficult. Brian says GJ is smooth, bro.
Up-to-the-minute geopolitical news wherever and whenever
I feel like
it
that's
happens.
biased. I
I'm
feel like you
Andrew
just want me to
Horder
look
in
at
Buenos
GJ
Aires,
with
Argentina, and this is Bloomberg.
I feel like you want me to look at GJ
All right,
with you,
we
bro.
have futures doing a whole lot of nothing.
I mean, if GJ's smooth, yeah, I'll look at GJ as well. It's good to look at a pair that's not dollar related at all as well. It'll be a nice break. Wow, I do see a lot of trades inside of here though. Look, Tokyo model. Look at that. That's beautiful, that. That's a beautiful setup. Broke the high, pull back. Let's see. Interested in this candle here. See what it looks like in a minute. M1 if I would have taken this. Yeah, on the M1 I would have probably taken the trade from here. Yeah, it would have missed. Sometimes you have to be honest with yourself, you know. They would have missed that setup there, but that's cool. Quite like that, you know. That's a really nice picture. Looks like you get another opportunity here on the 5-minute to go long. Another pullback here, re-entry around 2 p.m. That's a good time. 3 p.m. we continue. Brian, you know, I might start looking at GJ with you, my boy. But I need to see some setups, guys. You know, I need to see you guys post your setups too inside of the Discord, like, because I'm not looking at all these pairs. You know, the more eyes that we have, the more setups that we share together as a community, the easier it is to keep on top with the markets. You know, right now, in my opinion, EU and the dollar's dead right now. Right, the conditions are not great. The setups, the price action that's been printed is not great. So if someone else was looking at maybe a GJ or, you know, even AUD JPY, something like that, right? Then it's like, okay, cool, this looks really good. You send a setup, and then it turns my attention over to GJ, for example. And then I start looking at GJ, I'm like, Brian's onto something. Let me take this trade, or let me see if I can find a little entry here, a little setup. Anyways, let's break down GJ right now, yeah? Alright. So monthly, for me, I tend to start with liquidity. If it's a new pair that I'm looking at, I'll look at the quarterly chart just for a second. Okay, so quarterly, we've got this candle here that we're currently working inside of. Whoops. Right, so we've taken the liquidity resting above 2015 highs. Right, so we are very, very high. We're very, very, very high. If I head back down to the monthly time frame, you can see that we do have this candle here. We got a monthly block, right, which is where we keep banging from. Okay, so far, what is this telling me? What is the structure? It's just bullish, right? We're incredibly bullish. What confirms the bullish structure more to me now on the monthly is the fact that we've also broken this high here on the monthly as well. Okay, so what else do I like? In the prior months, this wick, right, that we had in April, right, has taken out some liquidity resting at the lows. We've taken out March's low. We've taken out February's low. Okay. Let's head to the weekly. So if I look at the weekly is also bullish as well. It looks like we've got a bit of a swing going on, right? Because if we look at highs and lows that created the trend or the structure. So for example, if I go to the lowest low here, what's the high that created this lowest low? Here. Did we break above it? Yes. So you can potentially look at this from a swing perspective like this, right? You can do it that way. That's perfectly fine. But everything so far from looking at GJ is pointing towards higher prices. Okay. So now I'm going to head over to the daily, and we're going to look at more immediate price action. Yeah. So what have I established so far? I've established liquidity on the quarterly, established structure on the monthly, weekly, and now we're going to establish structure on the daily. Right. The daily structure, really simply, is just bullish as well. If we look at potential swings, right, what I do like is we've taken out that high, we've pushed down lower, and go to the line chart. Boom, 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 boom. Okay, so what is a key high and a key low for me right now? Okay, is here and here, right? Why do I say that? You can see before we actually create this high, what did price do? It wiped out this low, right? It wiped out this low before we actually started to push up. Inside this level here on the daily, we have we have this daily imbalance, okay? So looking at this level here, this is the last area where we rejected from before we created new highs. Yeah, we did create a new high. Okay, so there's a few things that can happen already that I see. We can get markets pushing back down, testing the imbalance again. That's option one. Now let's look at the 4 hour. Okay. Okay. So 4 hour, what I can see, we got these highs here, right? We started to reject. We had a slight break of structure here, right? Once we rejected out of the daily imbalance, we pulled back. Had a new high, new low, new high, new low, new high. Broke down. Held the level. Right, we had a break structure there as well. If you guys can see, new low, new high, new low, and a new high here. So for me, how I'm looking at this is sort of like this. Boom, 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 boom. Okay. So essentially, if we're gonna see GJ continue to push up, right? My thing is, I quite like this low to hold. If this low here doesn't hold, if this low doesn't hold, then we need to look for GJ to head down lower, right? Back down to that daily imbalance. If this low doesn't hold, okay? Yeah, quite like that actually. So I want to see this low hold. I do. Right, can you potentially play this hourly candle? You can, which is the extreme, yeah? Did we get a new high? Yeah, we got a new high. Got a high low. So if I use my fib inside of a fib, my swing inside of a swing, we had a 82% retracement there. We had a new high. We have a new low. So right now, we are currently, let me remove this. Right now, we're currently sitting at 71%, right? We are at discounted prices. So GJ definitely has potential to head higher. It may drop a little bit more before we actually start to see a rally up, right? We could see something that happened here. We could see the body of the candle hold a 78% retracement, but then we may see a wick that wicks this hourly candle inside of here. Okay. So I'm bullish on GJ, Brian. I'm not too sure what your opinions are on GJ, but I'm bullish on GJ. It looks like intraday, it looks like GJ will come down today. But again, you know, once that interest rate decision comes out, all hell could break loose. But for now, structure's bullish, so I'll rather wait for GJ to show me buys and then try to get involved in the buy. Yeah. Other things that I do notice for now for GJ is that we are currently inside this 4 hour imbalance as well, which can be sufficient for a long move. Okay. What would kind of confirm a buy, right, for me? I need to see a candle close above these highs here, right? If we can see on the hourly, to be honest, I prefer the 4 hour. If we can see a 4 hour candle close above these highs, then there's a good chance that we'll continue heading higher. And then we can look to take some buys. I'm going to set some alerts to this. Yeah, it's not bad. It's a little bit technical, GJ, right now. Being completely honest, it is a little bit technical, but it's not unreadable. Do you know what I mean? It's not like it's unreadable, guys. Like, there is a possibility here, but obviously the setup needs to line up. The requirements need to meet or need to match. Sorry. Anyways, let's see what gold's doing. Gold's pushing up a little bit. Okay. Okay, so GJ, we'll see how that progresses. Let's take a look at something else. What is this? AU, USD JPY. Let's look at UJ. Let's see what UJ looks like. Many of you guys may know or may not know, but not GJ, UJ used to be my favorite pair. I used to trade heavy UJ, like nothing else but pure UJ back in like 2020. Like UJ gave me one of the the best setups I've ever seen. And then from that day on, I fell in love with UJ. I'm trying to remember where it was. Was it 2021 or was it 2020? It might have been 2021. It was a 4-hour setup. I just don't remember where it was. Let's just say from that point on, UJ was just bullish for a very long time. Like we've not seen those prices since. And it was a very easy setup to see as well. Anyways, let's just take a look at UJ right now. Ooh, UJ looks like it can drop lower, These lows look a bit tasty for UJ. Okay, so weekly, I have this weekly imbalance inside of here. Okay. We've had a pullback higher, dropped off. We have this gap. Daily picture. Have the exact same gap here on the daily as well. Ooh, this is not nice. This price action is quite bad. Yeah, this price action isn't the best, guys. The only thing that I do see inside of here is there is a clear eye candle inside of here. Very, very clear eye candle. Alright. Very, very clear eye candle. Obviously, you can see we're trending bearish here. Sunday, Monday, Tuesday, Wednesday. Right, we have the last down candle. Boom. Huge move. We have imbalance on top of it as well. Right, potential change of structure here. We've had a test. We've had a test. We've had a test. Accumulation of orders. UJ looks quite bullish to me. UJ looks like it could definitely get higher. This price action isn't the best for UJ. It looks a bit bland. I would have preferred when we were back down here. But this 4-hour looks incredible. Let's see if we can actually take out these highs here for UJ. Yeah, I don't really like UJ, guys. I think GJ may have potential sometime this week, especially tomorrow when the US market is closed. It is the pound against the yen, so this could give us something tomorrow. GJ. Gold, what are you gonna do? Are you gonna head higher?
Reportedly going to be less stringent when it comes to alcohol consumption. Language for the new guidelines will eliminate the long-standing recommendation that adults limit drinking to 1 or 2 drinks per day. Instead, Americans will be encouraged to drink in moderation or limit intake because of associated health risks. The guidelines are still under development and subject to change, according to the report. So, Katie?
All right, we will continue to
Drink
follow.
up.
We'll follow that one closely because it's still subject to change. But let's focus back on the stock market because despite wars, tariffs, and political upheaval, the S&P 500 still on the cusp of 6,000. That could change today after the Fed publishes its latest dot plot, with traders saying that forward guidance from the FOMC today could trigger a sell-off if it's hawkish. Joining us now to discuss is Bloomberg stocks and investment strategy reporter Alexandra Semenova. I'll ask the question that Matt asked in the break. Are people really bracing for this? Because it seems relatively placid if you take a look at the setup right now.
So the thing is, we're up more than 20% from the throes of April's sell-off. So it's not unlikely that investors will use any negative signal to lock in some profits. And today's Fed meeting could provide that if Fed Chair Jerome Powell is more hawkish than investors expect. Swap traders are expecting 56% odds of a rate cut in September. And if there's any indication from him that might not happen, it could result in some selling. That said, the fundamentals still do look good. Earnings estimates are going up. We've gotten positive economic data, and trade deals seem to be moving in the right direction. So a lot of Wall Street banks have been saying that this could be an opportunity to buy the dip. JP Morgan actually turned cautious on stocks, but they said that any kind of volatility would be a chance to buy in.
So wait, so you're saying that if he's hawkish, Wall Street will sell, and Wall Street recommends buying the dip on that sale?
Yeah, and that could probably explain some of the price action that we've seen. The S&P hasn't really moved much in either direction. We're up something like 0.7% since May 20th, and we've been stuck below an all-time high without any real catalyst. So we could see a downside catalyst from the Fed. Obviously, there were a lot of issues, leading up to this Fed meeting where we're at the valuations that we were in the first quarter, but there is a little bit more uncertainty from trade deals. But at the same time, fundamentals are still looking good. We are just kind of experiencing these cross currents, and the market needs to see something in either direction.
Let's talk a little bit about what's priced in for this specific Fed meeting. We have this great bar chart, and it shows that the implied move in either direction for the S&P 500 is about 1%. You're taking a look at past realized moves, and 1% doesn't seem huge, but it feels like over the last couple of meetings, the moves have been getting a little bit smaller.
Yeah, so this would actually be the smallest move since January. That's according to Piper Sandler data. The average realized move over the past 18 months has been 1.1%. My colleague Jess Menton has a great story on the Bloomberg terminal on this. So it's kind of expected to be a little bit uneventful compared to what we've seen in recent months.
Alexandra, is there any, are there any signs that it's institutional selling that we've seen in this market and retail investors buying the dip?
I mean, overwhelmingly so. If you see, this actually has been one of the most hated rallies that we've gotten in a while. Only 28% of the time have, in the past since 2010, have institutional investors been this underweight stocks, even as we're approaching an all-time high. It's really been retail buying a lot of it, and a lot of institutional investors still very neutral, kind of looking for more positive signals on trade negotiations.
All right, Alex, really appreciate the reporting. You have a fun afternoon coming up. That is Alexandra Semenova of our equities desk over on the Bloomberg News side. You take a look at the futures setup right now. Not too exciting. You can see we're up mildly on both the S&P 500 and the NASDAQ 100, down a little bit, and I stress a little bit when it comes to the small caps. And Matt, this kind of feels like payback for what an amazing May we had when it comes to the benchmark.
Right, up 6% in May, and it looks like we've been, or feels like we've been just moving sideways.
Treading water.
Ever since. Coming up, we're going to talk to John Stoltzfus of Oppenheimer. He remains bullish on the S&P 500. We'll ask him if the Fed scares him or if he's more concerned about attacks in the Middle East. This is Open Interest.
Okay. Here's what we're gonna do, yeah, guys.
Can you hear?
I'm gonna update you guys inside of the Discord. We've gone through a couple of setups. We've gone through GJ. We've gone through UJ.
But in the prelude,
so far, to be honest, I would like to see the dollar continue higher. That's just what price is currently pointing towards. It doesn't seem like we're going to get any other form of price action except for higher prices, right? We'll see. Obviously, come the interest rate, if we actually do take out some of these highs,
Get your
I
fixed
feel like the
income
picture's going to
fix.
change
Watch
completely
Bloomberg Real Yield
tonight.
around the world
So
right here on
there will be better setups. There will be better moves available. We just have to sometimes take our time with it. Let the setup come to us. We don't need to chase. But so far, quite like this 15-minute down candle. Looks like we're going to continue higher. So let's see how that plays out, yeah, guys. If there's anything else, obviously I will update you guys inside of the Discord as usual, yeah. So Money Day, thank you for joining. Those of you that did join, and welcome Henry. Money Day to the rest of you. Peace.